Alright, for this video we want to cover a sample form RT-6, which is a Florida Department of Revenue employer quarterly report. So these returns are filed by businesses that have payroll in Florida and need to report those wages and pay the state unemployment tax, or now it's referred to as the reemployment tax. So we've got a sample RT-6 here which we'll go through. I've also got one slide covering some background on the RT-6 and then some more details on the fact pattern below here. So if we start with the background details, again, this RT-6 form, it's a quarterly filing and it's used to report taxable wages that are going to be subject to the state reemployment tax. So in other words, this is the state's unemployment tax in Florida, or SUTA for short. Now, before you file the RT-6, you have to register with the Department of Revenue. So registration does two things. It first assigns you an RT account number, so this is kind of like a tax ID number that's reported on the filing, and it also assigns the new reemployment tax rate. So if you're a newly registered employer, the rate that you start off paying is 2.7% on those taxable wages, and you keep this rate for 10 quarters. Now after 10 quarters of history, the employer is now going to be eligible for an experience-based rate, which might be higher or lower than this initial 2.7. Now, how much is actually subject to tax? Well, it's only the first 7,000 of wages that are paid to each employee. So, in effect, the employer is going to pay a maximum of $189 in tax for each employee if we're using this standard 2.7% rate. Now, it's important to remember the tax is paid by the employer, so this is not a payroll tax deduction from the employee's pay. Alright, so now electronic filings. The RT-6 form can be paper filed or electronically filed. Electronic filing is definitely the recommended approach, but you're not required to do it unless you meet one of these exceptions, right? So electronic filing is going to be mandatory if the employer has 10 or more employees in any quarter during the last fiscal year. And it's also important to remember that if you're an employer and you have 25 employees or more, you have to certify with the state of Florida that you're using the E-Verify system to validate that this person is authorized to work in the United States. Alright, so if we have a look at the fact pattern here, we have John Q. Taxpayer. He's the 100% owner of a Florida S Corp. Now, John is the only employee and he's the only owner. But John needs to be on the company payroll because we have S Corporation reasonable comp issues. So John is going to pay himself a salary of $32,000 for the year, or $8,000 per quarter. And the company is also going to be paying John's health insurance premiums, which are $389 a month. Now, the inclusion of the health insurance premiums in his income is exempt from FUTA and SUTA. So you don't have to pay the unemployment taxes on this inclusion amount. We just paid on the base wage of $8,000 per quarter. Now, John's company submits the DR1, which is the application for that RT number, and he's assigned that initial reemployment tax rate of 2.7%. Now, for the first quarter of 2024, the company paper files this form. It reports $8,000 of gross wages, $7,000 of which is taxable, right? Because remember, you can't be taxed more than $7,000 on each employee, and so he's going to owe $189 of reemployment tax. Now, if we have a look at the form itself, and we'll go through all of the fields that have to be completed. So we've got the RT account number up here on the right hand side. The tax rate being applied for this quarter is 2.7%, and this is for the quarter ending March 31st, 2024. Now, the due date is anytime during April. If you file after the penalty date, then you're going to have to pay penalties on the late filing and late payment of tax. So you want to make sure that you're filing within 1 month after the end of the quarter. That's the deadline. On the left-hand side here, we've got the name of the company, the mailing address, and the physical location of the business. And then in box 1 down here, we have to report the total number of both full-time and part-time workers who perform services during those months. So month 1, 2, and 3 of this quarter, we just had one employee, right? John's the only one. Now, the financial statement information here on the right-hand side, this is all flowing through from page 2. So if we have a look at page 2 here, this is where you have to report the details of each employee. So you need the employee's social security number, the employee's name, last name and first, and then the wage information. So on line 12A, we report the gross amount of compensation paid during the quarter, which is $8,000. And then 12B is the taxable amount of wages paid in this quarter. Well, it can't be taxed on more than 7. So we report the $7,000 figure there. And then at the bottom, we total up all the amounts from 12As and then 12Bs. In this case, it's the same number because we only have one employee. All right, so now once all this information is completed on page 2, we can go back up to page 1. And on page 1, we report line 2. We have the gross wages paid during the quarter. The excess wages are those amount of wages that exceed that $7,000 cap per employee. And then we have taxable wages of $7,000. Now line 5, the tax due is going to be the tax rate above 2.7% times 7,000 gives us $189 of taxes owed. Now the tax that you're going to have to pay is obviously going to depend on this rate. So this rate for new employers is going to remain at 2.7 for 10 quarters, and then after that you need to see what your updated rate is, and then you'll either be paying more or less tax depending on how many claims you have, unemployment claims you have against the company. So $189 is going to be due. Lines 6 and 7 are blank for us because we're not filing late. We're going to file on time so we don't owe any penalties or interest. And then line 8 is blank as well. This is an installment fee. So you can elect to pay the taxes due in installments. So if you don't have the money or you just want to spread out the payments, you can pay those amounts in installments, but that would require a fee to sign up. So not for us. We're just going to pay the $189 with one filing and in one payment. So we've got the total amount due, $189. The amount that we're going to be enclosing with the return is also $189. And so this information is also reported on the payment coupon at the bottom of the form. So we see here we've got the RT account number, the federal tax ID number for the company, and then the company name and address. On the right hand side here we report the gross wages that's coming through from line 2 above, and we report the amount of tax that's going to be enclosed and the payment that's going to be enclosed with this voucher. The payment is going to be applied for the quarter ending March 2024. Now if you're paying in installments, you would check this box. If you're going to pay not with a check, but you're going to transmit the funds electronically, you can check this box and do so that way. And so that's and that way the Department of Revenue knows that, well, the payment's being made some other way and it's not being included with the filing itself. All right. Then lastly, we have the information on the signer. So John is going to go ahead and sign and date this. He's got his title here as CEO, and then he puts down a phone number and fax number as contact information. Now, if this was being done by a paid preparer, the paid preparer would input their information as well down here, and they would also have to sign and date the return for when they prepared and provided it to the client. In this case, no paid preparer, so we're leaving that section blank. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you on the next video. Thank you.